A50. AAI. A501%. PCE. AI. AI. /CH. N. Good evening, everyone, and welcome to today's market analysis. We saw a selective de-risking trend in the U.S. equity market today, characterized by significant structural divergence. The Nasdaq Composite truly stole the show, climbing 0.91% to close above 26,917. The S&P 500 wasn't far behind, gaining 0.58%, while the Dow Jones Industrial Average saw a more modest rise of just 0.05%. Market apprehension notably eased, with the VIX Volatility Index dropping 3.38% to 15.74. From a macroeconomic perspective, both the 10-year U.S. Treasury yield and the U.S. dollar index, DXY, moved lower, falling 0.58% and 0.54% respectively. These shifts typically create a more favorable environment for growth-oriented technology stocks. However, the internal market divergence was exceptionally stark. The strongest sectors were undoubtedly U.S. AI application software stocks, exemplified by Snowflake's performance, along with China's Chinex board, which surged 1.96%. In sharp contrast, cryptocurrencies and related concepts, such as IBIT, which fell 1.32%, along with oil and energy stocks, and U.S. bank shares, all showed weakness. In commodities, WTI crude oil prices plunged 3.8% to $88.60 a barrel, while spot gold bucked the trend, rallying a significant 2.73% to $4,525.40. Bitcoin also saw a decline of 1.23%, settling at $73,464.80. Behind this market action, capital flowed in three highly divergent directions. First, funds continued to pour into the most certain growth themes, particularly AI applications. Second, investors bought traditional safe haven asset, gold, to hedge against long-term uncertainties. Third, there was a large-scale withdrawal from high-risk speculative assets like cryptocurrencies, and cyclical assets such as crude oil. This suggests that capital isn't exiting the market entirely, but rather undergoing an internal risk rebalancing. Looking at the global market trajectory, Asian markets were initially dominated by US-Iran geopolitical risks at the open, with the Nikkei and Kospi indices both experiencing sharp drops of over 1.5% in early trading. However, as rumors of de-escalation emerged in the afternoon, losses significantly narrowed. China's A-share market showed greater resilience, with the Chinex index ultimately closing higher. European markets, on the other hand, performed poorly, with